The key here is thinking about it like, do you really know? And if your long term is so much upside of 100,000 or two or five or $1 million, once you get below 20,000, it's really like, okay, well, why are you squabbling over 5,000 bucks when you think it's going to go to $500,000?
Popular technical analyst Gareth Soloway is known for his heavily bearish Bitcoin price predictions. Late last year, while other analysts and market experts were calling for a new Bitcoin all-time high, Soloway predicted that the opposite was going to happen and Bitcoin was going to fall to the sub-20s. With that now out of the way, the popular technical analyst is still quite bearish on the world's leading crypto asset, at least in the near term. Soloway predicts that Bitcoin will find a bottom between $8,000 and $13,000. He has also predicted a plunge to $3,500 for the leading crypto asset. But that is a worst-case scenario with a low probability of occurring, according to the technical analyst. While these bearish predictions are popular, Soloway is also quite bullish on Bitcoin. Like every other Bitcoin investor, the popular veteran trader believes the crypto asset could hit $1 million and even go higher in the long term. In a recent interview, Soloway gives a detailed breakdown of his short and long-term prediction for Bitcoin and, more importantly, the time frame he thinks everything will play out. We will now take you to Gareth Soloway's latest interview on Bitcoin, gold, and the S&P 500. Please watch the video to the end, hit the like button, and subscribe to the channel for more videos on the crypto market. Also, be sure you drop your comments and observations about the interview in the comments section, as it really helps with the YouTube algorithm. Thanks, and enjoy the video.
Yeah, absolutely. So my real long term, 3 to 5 years out, I think Bitcoin goes way higher. I think eventually you see this pivot where we get good regulation, or at least regulation, so investors know the rules, right? And that's a big thing to understand for a lot of newer investors in crypto, is that investors, and you'll see this in the stock market, we hate uncertainty. We want to know the rules that we're playing by, and that allows us to make decisions about risk and reward. And so without this regulation, it's really keeping a lot of big money on the sidelines, which makes Bitcoin very, very midterm uninvestable. Now, shorter term, you're going to get little pops if the dollar drops. If we have equities rally, you see the risk on trade come in. But we can very clearly see that the pattern here is this is a channel, and it is a bearish channel. You can't deny that. It is a bearish channel of consolidation. So this tells me we probably haven't seen the lows. Just the mere fact that I see the stock market having another leg lower, a substantial leg lower, that also indicates that as a risk asset right now, Bitcoin probably goes lower as well. And so again, 12 to 13,000 is where I'm looking for, probably within the next 6 to 12 months. And then I do think you finally bottom out. Maybe we pierce 10K. It's hard to know where these things bottom out. But I think once you get in the mid-teens, low teens, for me, it's just starting to slowly dollar cost average in, and knowing that my long-term views are so bullish on Bitcoin. Even though I have a 12, 13,000 price target, my worst case scenario is 3,500. I think, again, you'd stop out a lot of people at a break of 10,000. So when you're trading, psychology is a big part of it. So the question is, where do you get max bearishness and people, like the most people, to throw in the towel and give up on it? That's usually the bottom. So the question is, where is that going to be? It's making me think it's more 10,000 or sub 10,000. But basically, the key here is thinking about it like, do you really know? And if your long term is so much upside of 100,000 or two or five or $1 million, once you get below 20,000, it's really like, okay, well, why are you squabbling over 5,000 bucks when you think it's going to go to $500,000? And do you want to risk missing the trade? So what I like to do, and what I do is, once it gets in the teens, right, and you're getting, within maybe 10,000 of the low, I take a chunk of money, right? And I say, okay, how much am I really willing to invest of my net worth in Bitcoin? And let's just say 100K. And so I'll divide that 100K up into $20,000 increments. And then what I'll do is, at my first buy, it'll just be a very standard robotic 20,000 at, let's say, 18,000 or 16,000. And then what I'll do is, every $2,000 or $3,000, I'll just have automatic limit orders set where I'm going to buy a little bit more, another 20,000, another 20,000. And by doing that, even if it doesn't get to my lowest target where I wanted to buy everything, at least my dollar cost average, especially on something I think can go to 100 or 500,000, it's so low at that point. You just have to have some involvement in it, because you don't want to miss the next vote, the next bull market. For me, it's really understanding that as much as the Fed is playing the hard game now and won't be able to print money in a recession, if we get to a bad enough scenario like a depression, they're going to stimulate. They're going to go back to what they know best, because they're going to see the pain. They're going to feel the political pressure to print money again. And so inevitably, and this is, you can go back in history to the Roman Empire or to other things, this is how they kind of kept their economies on afloat during bad periods. But eventually it's the undoing of the empires. And so if you're looking at something like a Bitcoin, which you have eventually, you have to assume regulation comes, eventually bigger money starts getting involved more and more. Number one, you just get like 1% of pension funds to put that money in Bitcoin. And right there, it's 100,000, if not more. But you start getting some of the bigger money involved with proper regulation and protections, and it's so easy to see it at even $500,000 at some point. Now, we're not talking near term here. You got to give it like 10, 15 years, but at some point it makes a lot of sense as kind of the digital gold. And with a run of only 21 million possible, if it can get taken on as a digital gold, $500,000 on Bitcoin is not outlandish.
For his short-term prediction, Soloway thinks Bitcoin will drop to $10,000 or lower within the next 6 to 12 months. However, he also thinks the crypto asset will be trading above $500,000 or even $1 million within the next 10 to 15 years. What do you think about these price predictions for Bitcoin? Please drop your comments and your own short and long-term price predictions for the crypto asset in the comments section below. Let's get back to Gareth Soloway's interview as he discusses his short and long-term outlook for gold and the S&P 500.
Yeah, sure. So number one, you have to understand with gold is that it's traded in US dollars. So as the dollar has rallied, gold automatically will come down, right? So the key to kind of gauge the analysis on gold and how is gold performing is to say, okay, how much has the dollar rallied in 2022? And the answer is about 20%. Well, how much is gold down in 2022? About 7%. So in a perfect world, gold should be down equal to what the dollar is up. So the fact that it's only down 7% is actually showing you accumulation. So that's a very big positive for me on the longer term here on gold. It tells me smart money is buying in. And then also, if you look at this chart, you had this nice little double top up here, but really what you're doing is you're consolidating inside of this bigger move. So I do think in a worst case scenario, you come down to about $1,550. But again, for me, as soon as you see the Fed saying we're going to have elevated inflation for a longer period of time, but we can't print and the economy is going to go south and all this other stuff, I think that's where gold actually starts to really outperform. If you look at the late 70s into the 80s, it was towards the end of the period where gold really took off. So I think you're in that kind of scenario. Yeah, I definitely still think we're in a bear market. I mean, the longer term trend on the S&P 500 is still fully intact. Like you mentioned, the July-August high, we still haven't even come up to close to testing that. In fact, let me show my screen here so we can kind of take a look at the chart itself. So this is the SPY, which is basically the S&P 500. And what you can see is the long-term downtrend from the high on the spiders is still fully intact, and we still have a decent distance to go. So for me, as long as we're below that line, the downtrend or the bear market is fully intact. Now, one of the interesting things you can see here is that if you take the 2020 low and connect it to this pivot low, look at how we broke that line, but now we're coming back and kind of testing that area with resistance. So it's a great day on the markets. I think today it's a sigh of relief for the markets. And what I mean by that is, we saw Meta's earnings, we saw Google, we saw Microsoft. I mean, it was just bloodbaths everywhere. Then yesterday after the bell, we got Amazon, and that was a catastrophe. And then Apple reported, and it was going down, and then it reversed. And now it's having a big up day. And everyone's like, oh, thank goodness. Like, we just avoided a major accident or collapse in the stock market. And so now you have a scenario where the big earnings of the trillion-dollar companies are over. The market now is going to focus back on the Federal Reserve. And I think there's this air in the market where the earnings have been so poor that the market is really hoping that this is where the Fed will say, okay, we're still hiking 50 or 75 at this November meeting, but afterwards we're going to take a pause. We see the economic data. We see that the earnings are getting really hammered here. So let's wait for a few months. And the market is craving that pause so badly.
As the market breathlessly expects the outcome of the next Federal Reserve meeting, here's what the crypto market looks like as of press time. Bitcoin, the world's largest cryptocurrency, is trading at $20,727, a 7.96% increase within the past week, according to data from CoinMarketCap. At $1,595, ETH, the world's largest altcoin, is trading at 21.50% higher over the past week. More surprising is the performance of Dogecoin. Over the past week, the Elon Musk-backed meme coin has jumped by 100% and is now trading at $0.1165. In addition to the massive price increase, the meme coin's daily trading volumes have also significantly increased. These spikes in the coin's key metrics show investors' excitement about Musk's Twitter acquisition. In April, the billionaire investor had talked about making Dogecoin a payment method on Twitter. Investors are clearly very excited about this happening. On October 29, 2 days after Musk sealed the Twitter deal, the meme coin jumped by almost 75% to $0.146, its biggest daily gain since April 2021. Other top crypto assets, including Binance, Shiba Inu, Solana, Cardano, Polkadot, Avalanche, Uniswap, and Polygon, have also recorded decent gains in the past week, but they are all showing signs of weakening as the Fed meeting draws closer and the uncertainty increases. Will we get any hint of a Fed pivot during the meeting, and how will such affect the markets? Please let us know what you think in the comments section below. Also, be sure you hit the like button, subscribe to the channel, and turn on post notifications if you are yet to do so. Everything helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks for watching.